I'd like to welcome you and thank you very much for coming today to hear an annual status report of your San Diego City employees' retirement system. We serve the employees and the retirees of the City of San Diego and also the San Diego County Regional Airport Authority and the Unified Port District. And we're here today because we want you to know what's going on with your retirement system. We pride ourselves on being transparent and reaching out to our members, and honestly, we like to see you in person. So thank you very much for showing up here today. It's great to have you. So we have a program today that we believe will address every question that you have. But just in case you do have another question, we've got these cool cards on most of the seats, and you can write your question on there. If you need a pen, just raise your hand. And if you have a question, you'll go ahead and hand that to Jessica Packard, right here, Carmen Bravo, or Mia Alamar, right over here. You can just kind of hold it up, and then they'll walk it around to me during the presentation, and then we'll be ready to answer those at the end. We'll have a little bit of time for that. And you're also welcome to put your contact information on the card if you happen to have something that requires more additional research or personal information there. So I hope on the way in you stopped at the table out front. One of our most active retiree groups is here with us today, the Retired Employees Association. They're a hardworking advocacy group that really keeps their finger on the pulse of what's going on around here. And I always welcome them to join us because I like folks to be informed. I'd like to introduce the president of REA, Mr. Jim Barras. Clap for Jim. That's right. And we do have a number of our REA members in here, Shirley and a good number of other folks. Do some quick introductions here for some other very involved people. Over here we have one of our current SDCERS board trustees, Mr. Thomas Sullivan, representing the police. We also have David Hall. Where's Dave? Dave over here is very involved. He is the president of what we call the Retiree Issues Task Force and really gives us a lot of feedback, works very hard on everyone's behalf. We also have the former president of the SDCERS Board of Trustees, Mark Sullivan over here. Excellent. And then I would like to introduce Joan Hernandez. Right here, she is the not only involved with REA, but is the president of the Ask Me retiree group. And if you have any questions about that group that welcomes all members, you can speak with Joan. She's very involved. And then, if you are not already receiving emails that tell you the most important information from Joe Flynn, Joe Flynn's right over here, and you can sign up, find out what's going on. All right. And everybody else, very important also. Thank you all for being here. Now, I'd like to just quickly introduce the team that you're going to hear from today, and we'll get started. We have over here Mark Hovey, Liza Krisafi, Marcel Voorhees-Rossman, and we have over here some more members of our team. We have our investments team. We have Jamie Hamrick, Corey Bohan, Anders Norman, and always watching us, we have our internal auditor, Lee Paravano. Excellent. So now, I'm going to turn it over to our Chief Executive Officer, Mark Hovey.
Well, it's a pleasure to be here today. This is our 8th annual meeting of the retirement system, and it's a pleasure to see a number of familiar faces and a number of new faces. We got one new retiree I just met a few minutes ago, so thank you very much for coming. One of the things that you'll be hearing from today is sort of an expanded outlook from our investment staff. They've done a great job, and so it's a pleasure to have the whole team here today. And then for my comments, I thought you might enjoy a little bit of a snapshot of how the demographics of our plan have changed over the last 10 years. We're back in business? We are back in business. So first, what's been going on with the retirement system? What's the status of your retirement system as of today? Well, first of all, we are still focused on long-term investment results. Despite the fact there's been a lot of churn and turmoil in the investment markets of late, our 3-year, 5-year, 10-year, and even long-term investment performance remains just rock solid. You'll hear more from Liza and her team later about what our long-term returns are. We've done very well in our private equity program. In fact, just most recently, Investor Intelligence voted the SDCERS private equity program the best private equity program for public plans in the United States. So we're very proud of Corey Buhuan and Liza Krisafi and their team for that record. A second thing that we're very proud of with our retirement system is that we're out of the litigation business. We were duking it out with the City of San Diego and the courts for over 10 years. That's no longer the case. Our relationship with the City of San Diego is the strongest it's been in many, many years. And that also goes for the port and the airport, where we have very strong relationships with them as well. A third item that I think you'll find of interest that's the current state of affairs for the retirement system is we have the only truly independent board of directors out of all 40 public pension plans in the United States. And what I mean by that is we have 13 board of directors, 13 members of our board, 7 of whom are appointed by the mayor. And they are appointed, meaning they are not members of the retirement system, so there's no inherent conflicts in how they might vote. And that independence is not shared with any other pension system. So I believe our governance structure is really the best that you can find in the pension business. Another item I've commented on there is exporting our expertise. Within the last few years, there are 3 former SDCERS board members who are now on the board of the San Diego County Pension System. And there are 3 former staff members of SDCERS in the city that are now also with the county pension system. They've been in the news a lot lately. They do need a little help, and we're exporting some of our good talent, so you can feel confident you've got some great resources that are now helping a fellow pension system here in San Diego. And then finally, we're not in the news. That could change, but for late, we have not been in the news. And I think as a retiree and as an active member, you don't want to be reading about your retiree system in the news, and we haven't been. I think we're doing the right things, and we're doing things right, so you feel good about that. I mentioned I was going to talk a little bit about some membership data, so let me show you a couple pie charts, and I'll talk you through a little bit of what these say if you can't read the numbers. This is a little information about the membership of our system. So you see 2 pie charts. On the left-hand side, you're looking at data from 10 years ago in 2005. And on the right-hand side, you're looking at data that's more current. So on the left-hand side, the biggest slice of the pie, a little over half of our members are active members. That's the blue section on the left. And on the right side, 10 years later, you can see our active membership has gone from a little bit more than half of our plan to about 1/3 of our plan. Whereas the retirees, 10 years ago, this is the green slice of the pie. On the left-hand side, it's about 1/3 of our members, and now you can see it's approaching almost half. So the City of San Diego plan is partially closed. It's closed to general members, and firefighters are newly hired. Only police members are going into it. So it's an aging plan. It's aging and getting older just like I am. So you can really expect this trend to continue. I'm giving a quick look at what the Port Authority's membership is. Again, you've got 2005 data 10 years ago on the left and current data on the right. So similar to what you saw with the city, over half the members were active 10 years ago. That's the blue part of the pie. And on the right-hand side, now you can see it's about 1/3 of the plan is active members. And retired members were a little less than 30%, and now they're about 44% of the plan. So their plan is also getting a little bit older, even though it's an open plan and new people are still going into it. And on the airport side, the airport plan is the newest plan that we support. They've only been in existence about 12 years, the retirement plan itself. And 10 years ago, almost the entire plan was active members. In fact, they only had 12 retirees. And now here today in 2015, you can see that about 70% of their plan is active, and they've got, I think, up to 80 retirees. I've not been commenting about the red slices of these pies. These are inactive members who have left the retirement system or left active employment and have left their contributions on account. The trends in the inactive members really aren't indicative or that revealing. So switching from pie charts to bar charts. This is talking about the average age of the members in our system. So you see 3 sets of bars. On the far left-hand side, this is the city plan. We're looking at what the average age is of an employee working for the City of San Diego. And you can see it's in the low to mid 40s, both 10 years ago and today. The middle set of bars looks at what the average age is when somebody retires. So 10 years ago and today, you can see city employees are retiring on average when they're around age 55. And then on the far right-hand side, you can see what the average age is of our current retirees. We have around 8,000 city retirees. And 10 years ago, as today, the average age is around 67 of our retirees. And we've had just a groundswell of new people that have been retired in the last several years. You might actually think the age would be coming down. But part of the reason that age is staying up there is because all of you are taking a great job and doing a great job of taking care of yourself. We're all living longer. That's a good thing. So congratulations, good news for you. That's why that's staying up that high. Then real quickly on the port information, active members on the left-hand side, the average active port member is around 45. The middle two columns, they're retiring around age 57, similar to what the city does. And on the right-hand side, the average age of a port retiree is about the same, 67 or 68. And moving over to the airport, again, it's just a younger plan. Their active members are now around age 45. The middle columns, age of retirement. 10 years ago, it was a little over 65. Now, airport employees are retiring around age 60. So they're retiring a little bit later than are the port and the city employees. And the average retiree age is a little less than 65. So a little younger on the airport retirees. Okay, so that's enough about ages. Now, this next 3 slides that you're going to see talks about the cash that are coming in to active members and retired members. So again, first starting with the city, on the left-hand side you see 2 bars, and what this is showing is that the average active city employee earned around $53,000 a year 10 years ago. Now today, the average active city employee is earning around $65,000. So that's about a 2% annualized growth rate in their salaries. It's pretty low. The wage growth has been pretty minor. On the retiree side, which is the right-hand set of bars, 10 years ago, the average retiree was earning $28,000, and today it's about $45,000 what the average retiree is earning. So the growth rate in the average retirement allowance is a little bit higher, and that's partly because newly retired people were earning a higher salary when they retired than previous ones, so their retirement allowance is a little bit higher. As well as retirees are subject to receiving annual cost of living increases, which can increase their payments. Just moving quickly on to the port and the airport, the average port salary member of an active member 10 years ago was around $60,000. Now it's a little over $80,000. That's about a 3% growth rate, so a little higher growth rate of salaries of our port employees. And on the right-hand side, if you look at the average retirement allowance of a port employee, that's grown from $23,000 to $40,000. Again, a little bit faster than the salary growth rate, reflecting higher salaries of new retires and cost of living adjustments. And then if you look at the airport, the average salary is a little less than $60,000. Now it's a little over $75,000. That's about a 2.5% growth rate. So wages at the airport are kind of growing in the middle of where city and the Port Authority is. And the retirement allowance is about $24,000 to $40,000. So similar trends with the average airport retiree. So that's a look at what's been happening with the retirement system today, as well as maybe a snapshot in the past, which I thought you might find interesting. So after today, what can you really expect with the retirement system? Well, for one thing, you can expect our assets are going to continue to grow for a long time. Even though we're a partially closed plan, we're projecting that the size of the pension plan will grow to as much as $10.5 billion. Right now we have about $7 billion under investment. So we'll grow to about $10.5 billion by the time we get to the 2025, 2026 range. So that's a big plan. We have a lot of money, and we have a lot of money to pay benefits for a long, long time. So you can feel confident that the system's going to continue to grow. Secondly, I think you can expect lower investment returns. Again, you'll hear shortly, historically, what our system has been able to earn investment-wise, but prospectively, virtually no one thinks we're going to be earning 9% every year like we used to. In fact, over the next 10 years, most people believe that our retirement system will be fortunate to earn 7% on an annualized rate. So if you're earning less from investments, to continue paying retirement benefits to employees, that means more money needs to come in from contributions. So our plan sponsors, and they know this, they will be needing to pay in more to ensure that the fund system is adequately funded. Active city employees will also need to contribute a little bit more. Port and airport employees, their contribution rates are fixed. So more money will need to come in. A third thing I think you can expect going forward is that our operational efficiencies will continue to improve. You know, we are operating SDCERS today at a lower administrative expense budget than we were 8 years ago, despite the fact that our plan has more than doubled in size. We're continuing to see efficiencies in terms of how we're operating the system, and I think that's good news. Secondly, we recently had an audit which confirmed that the accuracy of our retirement benefits is better than 99 and 44/100ths ivory soap purity. We are calculating benefits at a very high level of accuracy. I think that's good news for the members. And then finally, I believe our board diversity is a strength and will continue to be a strength for us going forward. We have a diverse group of board members who engage in very robust discussions when we meet. They are very concerned about the financial health and integrity of the retirement system and about your financial security going forward. So we've got a great group of board members, and I really enjoy the input that I receive from them every day. So that's a quick update on what's going on with us. And next, I would like to reintroduce Marcel Voorhees-Rossmann to cover some items on the benefits picture.
Thank you. Okay, so I'm the one that gets to deliver the good news to you this morning. At our November board meeting, that is going to be on November 13th, staff is recommending that SDCERS pay 13th check in Corbett this year. I know that's one of the things everyone's been waiting to hear. Thank you, Jim. The other piece of information that I wanted to share with you this morning is on the cost of living adjustment that normally happens in July of each year. Right now, the CPI, as of August, is trailing at about 0.2%. So it's at 0.2%. To pay the full 2% COLA, CPI needs to be at 2.0%. So it's got a little bit of room it needs to make up between now and the end of the calendar year, between now and the end of December, for us to be able to pay the full COLA to members next July. So that's maybe not as good news, but the really good news is we will be paying 13th check. And with that, I'm going to bring back up Cynthia Queen, our Membership Services Director.
People like to communicate in different ways. I like to talk. But today, I want to talk to you about our website and the member portal. Now, I know that not everybody likes to use computers. I talked to a few of you here today. No problem. I'll call you, send you a letter. But just briefly, I want to talk about our website and our member portal. We do have almost half of our members registered, so just a quick highlight here. The very useful feature of our website is this member portal where you can access your personal retirement account much like you would your bank account or credit card account online. So you can access it anytime and make some updates or check your information. But obviously, that means that very important confidential information resides within our system, your Social Security number, medical information, or your direct deposit information. Now, we hear too many stories in the news about hackers breaking into systems and accessing that personal information, which can be used for identity theft and fraud. And when we read about that, that's happening to agencies that don't have adequate security in place. SDCERS does. Okay? We use a system called Entrust Security, which is a solution that is used by more than 5,000 agencies in 85 countries, including NASA and Interpol and the State Department and large corporations. And we use this in order to keep your information safe. Now, we also are regularly reviewed by the Department of Homeland Security, and they have given us an A+ rating on our security system. So I want you to feel confident if you would like to use the website or the member portal that your transactions there are very safe. What keeps it safe is that you need to use a password and answer challenge questions, because this is the level of security that keeps it safe. So if you have any questions about that, of course, you can contact our call center. They can walk you through it. We want to make sure you're comfortable with that information. Now, I mentioned that about half of our membership is already registered on the portal. And each month, through a variety of means, our members make close to 500 different updates to their account, such as changing the direct deposit or changing a tax withholding. And I did the research, and 58% of those transactions are happening on the portal. So it is easy and convenient to use, and I'd like for you to check that out if you haven't already, and please let us know if you have any questions. Next, I'd like to talk about something that is very, very important to all of us, whether we are retired or not. But specifically, I want to talk about the retiree health coverage for the City of San Diego retirees. And I know a number of you are here. Now, SDCERS handles the enrollment and the reimbursements and any change processing for our health plans, which are determined by the City of San Diego. But we're the ones you're going to call when you have questions, and we want to help you with that information and make sure that you know what's going on. So, in order to do that, we have worked closely with the retirees and the retiree associations. And that's why I really made a big deal out of these folks when I first started talking, because we listen to what the retirees have to say. It doesn't really do any good what I think about how one might register, because I'm doing it a different way because I'm still an active employee. We want to know what's working for the retirees. So I'd really like to give a lot of credit to these organizations for helping us to hone and improve our services. In fact, just this past spring, for the first time, we held what we called a health coverage workshop right here in this room. And that idea came from Dave Hall, head of the Retiree Issues Task Force. He said people want to know more about it, and they want to know about it sooner. So open enrollment starts in June. So we held that meeting in the spring, and we had all the providers come and do a formal presentation to let folks know in advance what offerings would be happening for them. And then in June, when open enrollment happens, we have a very popular Help Day that we also hold here in this room, and that's a more informal setting where all the providers have tables and booths set up, and the retirees can go around and ask their own individual questions and talk directly with those providers to make sure they know what's going on. Now, each year we want to in order to make sure you know what's going on, we have a retiree health book, which I left right over there on the table, which you all, anyone who here who's retired would have received in the mail. That book is, I hope that you kept it, but it is also still available on our website. And we've worked very hard to make sure that that really answers all the questions that you have. Now, if the answer to your question isn't in there, please give us a call, because we most likely need to look up your personal account and make sure that we can answer your individual question. And we want to do that. So we really do want to be responsive, so please give us a call and let us know if is there anything we can do to help you further with any questions you may have. And now, I have the pleasure of introducing you to who I like to call the $7 billion woman, Liza Kristofi.
Good morning. Well, as Mark mentioned, we have your entire investment team here this morning, and I'd like to reintroduce each one of them and let you know what they're in charge of. So first of all, we have Jamie Hamrick. She's head of real estate. We have Corey Bujuan, who's head of private equity and infrastructure. And we have Anders Norman, who's head of public markets, which is really a fancy way of saying stocks and bonds. So what I'm going to do is, first of all, I'm going to give an overview of performance results for the year, what we did in the investment division, and then we're going to hear a little bit more from Jamie and Corey about what they're doing specifically in their different areas. So here are the investment returns for the year. And as you can see, we had a sort of a subpar year for fiscal 2015. With returns up 3%. And really it was a mixed bag of returns for the year, which I'm going to get into a little bit of more detail in just a minute. But as you can see, the 3-year numbers and the 5-year numbers will continue to be very strong at 11 and 11.3%. And again, that's really a rebound in the markets and a strong recovery from the global financial crisis, that occurred in 2008 and 2009. If you look at the 10-year number, which is up 6.9%, that still includes those 2 negative years, 2008 and 2009. And then you look at the longer-term results, 9.2%, still very strong. Then in terms of what happened last year, returns in public markets really were all over the board. So we had positive returns for U.S. stocks. U.S. stocks were up around 7% for the year. And again, that's based on steady economic growth in the U.S. The U.S. continues to be one of the strongest global economies. We also had positive returns in U.S. bonds, but less positive. They were up about 1.4% during the year. And again, that's a reflection of the low interest rate environment that we're currently in. As you know, the Federal Reserve continues to keep interest rates low. One comment I would make about U.S. stocks, we have been in a 6-year bull market in stocks. The average return on U.S. stocks for the last 5 years has been 17%. That is not going to continue. And that refers back to Mark's comment that we're going to expect to see lower returns going forward. Then we actually saw negative returns in non-U.S. stocks, which were down about 4%. And that's really countries in Europe. So the Eurozone was really affected by the Greek default and weaker economies there. And then we also saw negative returns in emerging markets. Emerging market equities were down about 5%. Emerging market debt was down about 15%. And the story there is really the slowdown in growth in China. Chinese GDP growth has been around 10%. It's slowed down to the 5 to 6% range. And the impact that's having on other emerging market countries is that China's a big consumer of commodities. In fact, they consume about half the global output of some industrial metals. And so some of these other emerging market countries that export iron ore, copper, things like that, have really been impacted by the slowdown in China. And then finally, the strongest contribution in returns came from private equity and real estate. Private equity was up 15% during the year, and real estate was up 13%. And we're going to hear more from Corey and Jamie about that in a minute. So looking at the year, what were some of the things that we accomplished in the investment division? Well, for one, we continue to fund the allocation to private equity. We have a 10% allocation, which we're getting close to getting to that target. And we also have a 3% allocation to infrastructure, which is a subset of private equity. And Corey will talk about that in a little bit more detail. And then, as Mark mentioned, we won this lovely award, which is the Investor Intelligence Award, and it recognizes the most outstanding and innovative public pension plan in North America. This award was voted on by about 800 of our peers, so other public plans and institutional investment firms. So this is really a great honor for the system, and I think it's testament to some of the great work that Corey's doing in private equity. Then we also reviewed our rebalancing model. What's a rebalancing model? Well, it's a tool that we use to minimize drift away from a target allocation. As an example, we have a 5% allocation to global equities. And we put a band around that, plus or minus 3%. So that 5% allocation can actually go up to 8% on the high side and down to 2% on the low side. When it hits one of those outer bands, it triggers a rebalancing. And what that forces you to do is sell high and buy low. Anders actually did a lot of work reviewing the rebalancing model and worked with BlackRock, which is one of our vendors, and came to the conclusion that the current model that we're using is very efficient and works well. Then we also completed a search for a general investment consultant. The role of a general investment consultant for a public pension plan is to work with staff and to advise the board on topics such as asset allocation, capital markets assumptions, or expected returns for different asset classes, implementation of that asset allocation, and then potential new investment strategies. So as a normal course of business, every 5 years we issue an RFP, which is a request for proposal, and we get responses, we review them, and really it's to reassess our working relationship with the current consultant and to look at the marketplace for what other consulting firms are doing. And the result of that process was that we rehired the existing consultant, which was Aon Hewitt. And then last but not least, we continue to review opportunities for the Opportunity Fund. And that's really a bucket which adds flexibility to the portfolio. It can be anywhere from 0 to 8% of the fund. And what we're looking for are strategies that might be shorter term in nature or that occur due to dislocations in the market, or strategies that might not fit neatly elsewhere. The goal is really to look for strategies that add diversification to the portfolio and or superior returns, and to give us some flexibility. As an example, we currently have in that bucket, we have some opportunistic real estate, and we have a couple global credit mandates. And what that means is basically we're investing in some US bonds and European bonds that the large banks have to get off their balance sheets due to regulations like Dodd-Frank and Basel III. So we're taking advantage of that. So that's something that's going to continue. And then last, we have the asset allocation as of June 30th. And you can see the different mix of asset classes here. If you total US equities, non-US equities, emerging market equities, and global equities, you can see we've got about 51% of the portfolio in stocks. That's the single biggest risk factor in this portfolio. And that is why we have all of these other different asset classes to offset that risk. Basically, what we want to do is create a well-diversified portfolio so that when we have a year like this last year, you have a mix of returns. So not everything's doing poorly. You have some asset classes that are doing well, some that aren't doing so well, that it offsets each other. And that's the benefit of a well-diversified portfolio. So with that, I would like to turn it over to Jamie Hamrick, and she's going to talk to you a little bit about what we're doing in the real estate program.
I'm a little shorter. Good morning. I first wanted to start by talking to you a little bit, about the real estate portfolio composition. The role of real estate is to provide income and diversification to the total portfolio. Income is provided to SDCERS as tenants pay their rent. SDCERS can then use that income to pay benefits, or it can be used to fund other investments. SDCERS invests in institutional real estate. So there are 4 main property types that we're able to invest in. The first type is office, and this is what you would think of as a traditional office building. The second type is apartments, and this can either be an apartment building or an apartment complex. The third type is retail, and this can range in size from anything from a mall to a grocery-anchored shopping center. And the last type is industrial. You can think of this type as a warehouse for storing products or to produce other products. An example of an industrial asset that SDCERS owns is an industrial asset in Buena Park, which is within Orange County. In this facility, they store sugar and plastic pellets. You might not think that those go together, but the equipment that we use to process and store those is actually the same. So they're able to use those to sell the sugar to suppliers, and they use it to make whatever they're going to make. And the plastic pellets are then sold to make water bottles. Finally, these properties are large. They range in size from $15 million for a single property and can range up to the hundreds of millions in our large commingled funds. They're stable, meaning they have a high occupancy. Higher occupancy means you have more tenants and therefore you're receiving more income. and they are high quality, meaning the tenants have been vetted and they will be able to pay their rent. SDCERS is able to make these investments through 3 different types of vehicles. The first vehicle are commingled funds. You can think of this as a large private mutual fund that's buying real estate. An example of something that SDCERS is invested in is an investment with the JP Morgan Strategic Property Fund. It's a very large fund, and they're buying very large assets. So an example of an asset that they have is the Westfield UTC Mall in La Jolla. So it's a very large fund, so we own a very small percentage of a very large fund, and thus a small percentage of that asset. The next type of vehicle that we can invest through is our separately owned properties. SDCERS has an investment manager that buys properties directly on our behalf. These are properties that SDCERS owns 100%, and they're limited to the 4 property types that we mentioned previously. An example of something that we own within the portfolio is an apartment complex in Vista. So those of you that might be familiar with the Vista area, we have a complex up there called Rancho Hills Apartments. And the last type of vehicle that SDCERS can invest through is our global REITs. So SDCERS has an investment manager that buys and sells global REITs for our portfolio. Well, a REIT, let's start with what a REIT is. A REIT it stands for Real Estate Investment Trust. So a REIT is a real estate company that can buy and sell real estate, and the company is traded on a stock exchange like a normal stock. What makes it different from a stock that you might normally see is that it's required to distribute at least 90% of its income. It also has some other attributes, but it's mainly has to distribute that income to investors. And each investment is thoroughly researched by staff and the real estate consultant, Aon Hewitt. So moving on to performance, this represents the performance as of March 31st, which is the most recent performance that we have. As you can see from the graph, the real estate portfolio has had very strong performance over the last 1, 3, and 5 years. 13.1 for the last fiscal year, 12.2 for the last 3 years, 13.9 for the last 5 years. And the since inception return of 8.1% is also very strong. And that actually represents about 25 years of history. For the last fiscal year, I wanted to talk a little bit about that and what's driving that return. For the last fiscal year, that 13.1%, about half of that was driven by our separate account, which is buying separately owned properties. SDCERS currently owns 21 properties within that separate account, and that return for about half that was 14%. We also saw a continued recovery in our value add and opportunistic real estate, which those were having some strong income and appreciation returns. So while the returns in the most recent years are very attractive, that trend is unlikely to continue in the future. This was a result of the recovery from the global financial crisis in 2008 and 2009. We are expecting that real estate returns will moderate and generate closer to a 7 to 8% return in the future. Now I'd like to turn it over to my colleague, Corey Bujuan, to go over private equity.
Thank you, Jamie. Good morning, everyone. So I'm very pleased to be here today to give you a little introduction into private equity. The role of private equity in our portfolio is to provide excess return and diversification. Now, for some of you who may not know private equity is essentially an asset class that are investments in companies that are not publicly traded on the stock exchange. So what exactly do I mean by that? So a good example of private equity is Dell Computers. Michael Dell started selling computers out of his dorm room one day, and he grew that into a very large company. This company was eventually listed on the stock exchange, but about 3-4 years ago, a private equity firm called Silver Lake Partners decided to purchase all of Dell to take that company private. So that's one example on the very large side. Private equity also deals with very small companies in venture capital. So Fitbit, some of you may know, is a device company that makes these little wristbands that help you measure your heartbeat and how much you're walking. And that was a small technology company that two venture capital firms, Softtech and Foundry Ventures, decided to invest money in and take ownership. That company has now since been listed in the public markets. In infrastructure, which tends to deal with larger, essential projects that are necessary for the functioning of a society, we also have investments there. So things like power plants, things like pipelines, that's where we can also make some investments. Now, SDCERS makes these investments three ways. The first is, like what Jamie talked about, through what we call a primary fund, or it's like investing with a mutual fund. We have very smart fund managers that go out and find us these excellent investments at extremely low prices, and we invest with them. Another way we invest is through secondaries, and that's where if an existing investor in that fund wants to sell their ownership stake. Now, I bring this up because it's a key to our strategy. During the 2008 and 2009 financial crisis, there were a lot of large institutional investors that needed to get money quickly. And private equity is unfortunately an asset class that doesn't have what we call liquidity. So they were willing to sell their stakes in these funds at significant discounts or well below the market value because we were there to buy those stakes from them. So that's one example of why I believe our returns are where they are. The last way SDCERS invests are through co-investments, and that's where we will invest in a company directly alongside a manager who will be managing this company on our behalf. Now, just to talk a little bit about our program, the program started in August 2009, so we're about 6 years old. We've invested approximately $630 million so far, which is just under 10% of the portfolio. As Liza mentioned, we have a 10% allocation to private equity and a 3% allocation to infrastructure for a 13% total, so we're still growing out this program. We're pleased with what we've been able to return so far, nearly $200 million, or approximately 30% of what we've invested. The one-year return, and this is net of all fees and expenses, so this is just pure dollars back to SDCERS, has been 15%, and our since inception annualized return has been 18%. We're very proud of this, and it is because of what we call our opportunistic strategy, being able to invest during times of crisis. We were able to find very good assets at very low market prices. So in conclusion, I'd like to say that even though private equity has only been 6 years old, we believe it has been a strong addition to SDCERS, and we hope that we will continue adding returns and stability to your retirement fund. Thank you very much. And at this time, I'd like to turn it over to Cynthia Queen, who will be taking charge of the Q&A portion.
Thank you very much, Corey. And thank you to those of you who submitted some questions. We have about 10 minutes left here, and we'll go ahead and go through those. I'm going to start with two questions that we'll have Mark Hovey answer for us. These are both related to Proposition B, which was the recent pension reform measure. The first question, Mark, is, as part of Proposition B, only police officers are allowed to continue in the pension system. Could you give us a very brief definition of Proposition B and explain how this will affect the 10 to 30-year future of SDCERS' bottom line?
Sure. As Cynthia mentioned, about 2/3 of the plan was closed to new hires when Proposition B was enacted 3 years ago. So now only firefighters are entered into, newly hired firefighters are joining the pension plan. Sorry, newly hired police members, thank you. And newly hired firefighters and general members are being put into a defined contribution plan. So over time, that means that we're not going to have nearly as many general members and firefighters that would be in the plan. I explained that our fund will continue to grow for another 10, 11 years before it actually starts to get a bit smaller. We have asked our investment advisors as well as our actuary what this means to the plan if many, many years or decades down the road, this plan becomes a lot smaller than it is today. And they said, well, you know, many, many years, decades down the road, we will probably need to change our current investment allocation that we currently operate. So Liza explained what we have in stocks and bonds and private equity and real estate. We'll need to make changes to how that pie is arranged, but we won't be needing to do that for quite some time given that the plan is still growing.
Thank you. And now a follow-up to that. What will happen if Proposition B is overturned?
Yes, Proposition B, when it was enacted by the taxpayers 3 years ago, was immediately challenged by labor organizations, and those challenges are now being heard before a statewide agency called the Public Employee Relations Board, or PERB. The case is still before the PERB board. They have yet to hear it. There was an initial ruling, but it's now before the full PERB board. So we don't really have a final ruling on whether Proposition B will withstand its challenges. And even after the PERB board does make their final ruling, it's still quite possible that the city or the labor organizations may challenge this in Superior Court. So I suspect that the fate of Proposition B won't be known for a great number of years. But in the meantime, it's the law. So, as I said, newly hired firefighters and general members are going into a defined contribution plan. So that's what we're operating under. If at some future point, which again I expect to be many years down the road, that law is changed, well then we'll need to come up with a plan B on how to deal with the fact, another plan B on how to deal with everyone.
Thank you, Mark. And just a related follow-up to that. The question is, what would we do if the Reed DeMaio proposition goes to the voters? We were just discussing this with Mayor Faulkner the other day. Just a brief explanation of that.
I'll keep this brief. Former San Jose Mayor Chuck Reed and former City Council member Carl DeMaio have drafted an initiative that they would like to bring before California voters in 2016. And the effect of that initiative would be to, beginning in 2019, and a few years from now, any new hires after 2019 would not go into a defined benefit plan, which is what we operate. They would instead go into a defined contribution plan. So that is not yet before the taxpayers. It's not even a ballot initiative yet. They first need to get many, many, many signatures before it would go on the ballot. So this item will be written about in the newspapers for some time before it finally goes before the taxpayers. So stay tuned on that.
Thank you. And now a question for Liza. We often get this, and one of our astute members out here has asked Liza, how can they emulate SDCERS investment strategy? Or restate the question if I didn't do it right.
Good luck. Well, you probably can't, is this on? Emulate it exactly, because our investments in private equity and real estate, the average investor can't get access to those. I would, however, suggest that in public markets, you can look at our asset allocation and replicate that probably through the use of indexes. For real estate, I mean, most of you probably own a home, so that could be your real estate exposure. Private equity, you're probably not going to get exposure to. I think one of the questions that I saw talked about, how can we get returns like SDCERS is getting for some of your other investments like 401k and the SPSP. One of the things that the city is looking at, as well as the members, I think we just voted on this actually, is whether to offer SDCERS as an investment option for those DC plans. Obviously the city council would have to approve that, and there's more work to be done, but we are looking into that.
Thank you. There's that. And now Marcel will give us a brief explanation of what that 13th check actually is.
So the 13th check is a program that applies to all 3 of our plan sponsors, and it allows for an additional payment to members that's made in November if the system meets certain criteria. So there's a target we have to meet of realized gains in our portfolio. Once we meet that, then it triggers the ability to pay this payment. Depending on when you retired determines how much that payment would be. It's a formula that calculates a certain amount per year times the number of years of service you have. So if you have specific questions on your 13th check, please go ahead and give us a call. But that's the general explanation of what that is.
Thank you, Marcel. And now a few questions for me that I shall ask myself. This one is, recently some retirees received a letter from me and were required to change their federal tax withholding. What prompted this change? First, I want to state that if you did not receive the letter from me, it does not affect you. We did send out a letter to a small population of folks who needed to make an update to their federal tax withholding. Didn't have any effect on past taxes. And that was because we determined that we had allowed folks to choose a flat tax withholding for federal taxes, and we weren't supposed to. That can only happen with your state tax withholding. And so when we determined that we had something that wasn't in proper compliance, we wanted to reach out to folks, and the effort was to make that as simple as possible and to clearly explain what was going on with that, and encouraging members to call if they had any questions. So that is why I encourage you to please read any mail that you receive from SDCERS. We are really trying to make an effort to reach out to you and let you know if there's any updates that we have for you. And we will, of course, continue to reach out to people in multiple means to make sure that they have the important information that they need. So thank you for that question. And whoever asked that, if you would like to see me afterwards with any follow-up, I'd be welcome to talk about that with you more. Now, this question relates to the website and member portal, which I was showing you before. The question is, could you change the number of dependents on your W-4, and could you do it online? Yes, you can. If you went onto the member portal, on the left-hand menu, it is there's an item called tax withholding, and you can make changes there. Of course, if you don't want to do it that way, you can certainly just contact us, and you can do it on a paper form, and we'd be happy to help you whatever way is best for you. Another electronic question. A person is just wondering if they could send us documents that they have recently had updated electronically. Yes, you may. And if you're welcome to do it via the Contact Us page of our website. It does have the ability to attach a PDF document to that. So you're welcome to do that. You can also do it via regular mail or contact us for a direct email. We want to make it easy for everyone's different preferences. But yes, you can send the documents to us electronically. Now, I have 2 questions related to beneficiaries, and I always want to emphasize that being aware of who your listed beneficiaries are is very important, and keeping that updated. I could go on for an hour about beneficiaries and the difference between a beneficiary and a continuance. So I just want to clarify that when one goes to retire, there are certain decisions that are made that can never be changed. Okay, if you pick a continuance, we have some folks who are called continuances here in the audience today, where they are, we're married to a employee who has since passed on, and then they're receiving that continuance check. That never changes. In the case of divorce, it can depend. So I would want you to call us to clarify your own individual case. There's also a beneficiary which receives just a one-time payment. Those can be changed. Okay, so all that I just said right there, what I really want you to remember is to just check your documents that you have at home and see if you're aware of who your beneficiaries are and if you have all the paperwork that you received when you retired. And if you don't, and if you'd like to check on that, you can use the member portal. You're also welcome to call us. We want you to be aware of that and want you to make sure what information you have out there, and we very much would like to help you with that. Thank you for that question. Now, just briefly, there was a question that came up at the end, which was saying that with Proposition B, since many of the members are not entering our SDCERS system, does that change anything with Social Security? And no, it does not. It certainly doesn't change anything for anyone here in this room, and there's a different system set up for people who are not members of SDCERS, the newer hires. Okay, now I just want to touch on a couple final things as we wrap it up here. I was pleased to see that we had a number of active members in the audience today. I'm trying to keep this short so you can go have some lunch before you head back to work. And let's hear it for Park and Rec. Got a good showing here. All right, thank you. I love this location. You will soon be receiving in the mail, for the first time, what we call an annual member statement. Okay? And it's just a snapshot of what your account looks like because we want you to be aware. It's going to tell you what your balance is and your years of service credit, and it's going to list your beneficiaries. You could look at that information anytime you wanted to on the portal, but because not everyone does that, we're trying to get your attention. So please take a look at that. And if you notice anything on there that you have a question on, just give us a call. It's fine. If it doesn't show the beneficiary the way that you thought you had it listed, just give us a call. That's the whole point, we just want people to be aware. So please be looking for that. And then also wanted to just make sure that all of you folks who are still working are aware that we have pre-retirement seminars. We've really enhanced that feature, and I know somebody here had just recently gone to one, so we'd really like to encourage you to do that because we're really just trying to share as much of that information in advance so that you're all ready and excited when you come to retire. And then for those of you who are retired, if you do have some questions on the beneficiary or the continuance or what exactly is going on with your 13th check, please give us a call. We really do want to answer your questions, and we'd be happy to hook you up with the proper person. The call center staff might not be able to answer your question. They're going to pass that on, and we're going to make sure we get that answered for you. So thank you for that. And before I send you all on your way, I just wanted to acknowledge one other person on our staff who I didn't acknowledge before because she was being sneaky and sitting in the back. This is Lourdes Silva, our Human Resources Manager, and she was taking advantage of seeing some favorite friends from the police department, and so thank you, Lourdes, for being here today. It's been great to see people from so many different locations. So I would just like to thank all of you for being here today. Just give yourselves a hand. Thank you so much. Really appreciate you being here, and I hope you go out and have a wonderful day, and please do contact us if you have any questions. Thank you again.